third way that a finance department can help increase the profits in a company is to decrease the risk or to contribute to the decreasing risks. And I have a whole bunch of risks here, so I'm going to refer to my notes on this one. We'll see how we do. So first of all, growing or outstanding accounts receivable absolutely form a big risk. Okay, the longer money gets left outstanding, the more questionable it becomes whether I collect. It also increases my costs because of borrowing costs and things like that, and it decreases my stability with my bank, because the longer accounts receivable are left, the more they start discounting them. The second risk, unsettled or unhappy suppliers. Okay. In addition, missing extras that can be charged, for example, in project work or where there's changes, involved in the scope of a project. Lack of adherence with or compliance to regulatory things that may be going on within a company. And of course, the fifth one is unexpected events. Now, with regards to the first one, growing accounts receivable, there's a number of things that a finance department can help do. And again, I have my little list here. Move to weekly or bi-weekly invoicing instead of monthly invoicing. Okay? Find out the invoice payment cycles or the cutoff cycles of your customers, and make sure that you get the invoicing in time so that you don't just miss it. If they cut off on the second of the month and you've got your stuff into them by the third, next thing you know, you're waiting a whole extra month. Or they may cut off on the 28th of the month, and if you haven't got your invoice in time, again, you're sitting on the receivable for an additional month. Quite often, one of the problems in professional services firms that they have is the people who are late on billings are the owners or the partners, or the senior personnel. Well, the people in the finance team can actually sit with those individuals and help them get the billing off their plate. We've had a number of situations where clients have done that kind of thing. If it's helpful, set internal deadlines, moving the date of the internal deadline a little bit faster so that you can process the billing and actually get it out to clients earlier. Propose changes in terms of payment with your major customers. Look for deposit, look for progress payments, things like that can actually reduce the accounts receivable. A lot of people assume that net 30 is the way that they need to go. It's not. There's a number of clients that thought that, but then when we talked them through this, they found that they could actually get better terms just by asking. They don't always get them, but they get them in enough cases that it actually makes a big difference. An example of this, did you know that Starbucks, one of the major contributors to the growth of the Starbucks enterprise, was a little Starbucks card? These prepaid cards help pay for all their locations because they've got people's money in advance of even selling the coffee. And if it can work for somebody as big as Starbucks, I promise asking for money up front can work for the small to medium-sized enterprise as well. Analyze the impact of offering, say, a 2% discount if they pay within 10 days, so a 210 net 30. So it might cost me a little bit on the actual invoice, but the other side of that is that by getting the money quicker, it helps my cash flow, increases my certainty, and creates far more predictable profitability as far as that side of it's concerned. The other thing is identify regular or repeat billing customers and see if you can get on an automated system with them so that you don't have to constantly bill to be paid. There could be a certain portion, if not all, of a billing that can actually be done on a regular basis. Now that's all about outstanding or growing accounts receivable. The second thing that's there is unsettled or unhappy suppliers. Okay, now with unsettled or unhappy suppliers, quite often it's because you're hoping that things go in a particular way, you get surprised, or sometimes you can even anticipate that you might have problems, you're hoping they don't occur, you get the stuff from the suppliers, now the supplier's left hanging and you have a problem. One of the things that you can do with regards to that is to actually negotiate in advance with suppliers. If you went to them and said, listen, I can do this, but I'll give you a deposit, but can you give me 30, 60, 90-day terms? Well, done up front, quite often the suppliers are happy with that arrangement because they know what to expect. And it actually reduces your risk of missing your commitment with them. A second thing that happens, and again, sometimes unexpected things do occur in businesses, and you have a difficult time actually, covering your commitments to suppliers on a timely basis. One of the mistakes people make is they actually go out of communication during those times, hoping they'll collect enough money so that they can give the supplier good news. Well, to a supplier, any news is better than no news. So even if you can't pay, be in communication, promise to be in communication, and let them know what you'll do and when. So that's one way to change that risk. Another one is missing extras or change orders. This is one of the areas where the finance department, by working with operations, can actually help make sure that things like that are caught, so that lost profit opportunities due to changes from the client or customer don't get overlooked. Fourth area is adherence to regulatory conditions. I've seen people where licenses lapse, where requirements for other regulations actually go unnoticed and people are left hanging. Okay, that can all be achieved using a systematic approach. Here's what you find. The finance department has to cover things like their tax, their reporting, and a whole bunch of other things on a regular, timely basis. If there's something that's got an annual deadline, give it to the finance department and let them track it. They'll let you know 2 weeks or a month in advance of when this thing is due, and they can take it from there. So there's, again, a number of different regulations that were there. We actually had one situation recently where there was a plumbing contractor who'd gotten a special ticket or license, allowed it to lapse, just ignored it and didn't realize that it was that much of a priority, ended up catching it later, had to retake the course. It was a 6-month course with a $2,000 price tag just to retake the test to get back into compliance again. Things like that can be can be handled if the finance department is involved with just tracking, which is what they do best. And the fifth area is unexpected events. Okay? Now, things happen. Tragedies occur, upsets happen. That's why things like insurance are there. Well, the question is, by playing what-if games, a finance department can answer the questions like, okay, what happens if one of these tragic events occur or an unexpected event happens? And does our insurance have the right coverages? Are we paying the right amount for insurance? Not too much, but enough so that we got coverage that we need. In other words, are our risks covered or at least addressed? If you're conscious about each of these different areas, you can actually decrease the risks involved associated with a business and protect the threats that threaten to actually decrease your profits because you want profits on a sustainable basis. So by decreasing risks, you can achieve just that.